Have you ever looked at a mining stock and just wondered what really makes it tick? What's behind the wild swings in its price? Well, it's not just some black magic, it's actually math. And today we're going to pull back that curtain and look at the powerful mechanics that can send a silver miner's value into the stratosphere. So let's get into it with a really cool case study on First Majestic Silver. So this is the million-dollar question, right? It sounds pretty simple on the surface, but the answer reveals this incredible concept called operating leverage. We're about to see exactly how a change in the price of silver doesn't just add to a company's value, it actually multiplies it. It's a game changer. Okay, so to really tackle that question, we can't just throw darts at a board. We need a specific financial tool, one that lets us peer into a mine's future and figure out what all that silver it's ever going to produce is worth right here in today's dollars. And that very tool is called net asset value, or NAV for short. Now, the easiest way to think about it is like this. A mine is basically just a giant pile of future profits waiting to be dug up. NAV is the formula that tells us what that whole future pile of cash is worth if we could just have it all in our hands right now.
So how do we actually calculate it? Well, it's kind of like a two-step dance. First, you have to project all the money a mine is going to make year after year for its entire life until there's nothing left. Then, and this is the really crucial part, you discount all that future money back to today. Why? Because a dollar you get 20 years from now is worth way less than a dollar in your pocket today. Makes sense, right?
All right, enough of the theory. Let's get our hands dirty and apply this to our case study, First Majestic Silver. To build any kind of model, we've got to know their core numbers. You can think of these stats as the engine for our entire analysis. And here they are, the key ingredients. So, First Majestic pulls about 31 million silver equivalent ounces out of the ground every year. Now, their all-in sustaining cost, which is basically what it costs them to do everything from digging to processing to just keeping the lights on, is around $17 per ounce. You got to remember that number, $17. That's the hurdle they have to clear just to make a buck. Okay, now this is where it gets really fun. We could do all that complicated math for every single price scenario we can think of, or we could simplify the whole shebang down to one single powerful number, a number that acts like a magic key to instantly unlock all of our what-if scenarios. That's right, the entire super complex relationship between the price of silver and First Majestic's future value, it can all be boiled down to a single multiplier. This is what makes this kind of analysis so incredibly cool and, honestly, so powerful. And there it is. 34 cents. For every single dollar that the price of silver goes up, the net asset value of First Majestic goes up by 34 cents per share. That little number already has all that complex future cash flow and discounting math baked right into it. It's our shortcut. So now we get to put our new magic number to work. We're going to run 4 different scenarios. We'll start with the pretty conservative view from Wall Street, and then we're going to crank the dial all the way up to a hyper-bullish case, just to see how dramatically the company's valuation transforms. First step, let's look at the baseline analyst consensus. They tend to be cautious, so they use a long-term silver price of around $30 an ounce. As you can see here, with their costs at $17, that leaves a profit margin of $13 per ounce. It's decent, it's profitable, but it's not exactly setting the world on fire. At that $30 silver price, the math tells us the net asset value is about $12 per share. This is our starting point. Our ground zero. Keep that number in your head, $12. Okay, now let's get real. Let's say the current spot price for silver is $82. Now look at that margin. It doesn't just get a little bigger, it absolutely explodes. It goes from $13 to $65 per ounce. Folks, this is operating leverage in its purest form. So what does that do to our NAV? Well, the price jumped $52 from our baseline. So we take that $52, we multiply it by our magic number, 34 cents, and we add that to our base NAV of $12. The result? Boom. The NAV more than doubles to almost $30 a share. See how that works? But what if you're a silver bull? Let's get a little more aggressive. Let's run a scenario with $120 silver. The margin is now a staggering $103 for every single ounce they pull out of the ground. Look at that. The cost bar is just a tiny little fraction of the price bar. At this kind of price level, the company is just a cash printing machine, generating well over $2 billion a year in free cash flow. And our NAV calculation reflects that, jumping all the way up to $42.60 per share. The value is just climbing and climbing.
And finally, let's go for the hyper-bullish case, $200 silver. This is where a company with fixed costs like First Majestic truly shines. The profit margin is now a massive $183 per ounce. The leverage is just at its absolute peak here. And, not surprisingly, the resulting NAV is just as stunning. The intrinsic value of the company's reserves, when you discount it all back to today, pushes the NAV per share all the way up to nearly $70. I mean, that is a whole different world from that $12 baseline we started with. Okay, let's just take a quick breath and put all of this into perspective. We have just watched a value escalation of epic proportions, and it was all driven by one single variable: the price of silver. This table, right here, tells the entire story beautifully. As you can see, the silver price goes up about sevenfold, from $30 to $200. But look what happens to the operating margin. It increases by over 14 times. That massive, outsized expansion in profitability is what drives the NAV per share up nearly sixfold, sending the company's implied market cap from under $6 billion to over $34 billion. That, my friends, is the awesome power of operating leverage. But wait, there's more. The NAV isn't always the final word. The stock market often pays a premium for companies it considers best in class, and First Majestic has historically traded for 1.5 to 2 times its net asset value. This means that in those more bullish scenarios we looked at, the actual stock price could trade significantly higher than even the incredible intrinsic values we just calculated. So the most crucial takeaway here is that this framework doesn't just apply to First Majestic. This is a tool that you can now use to analyze any miner, which, of course, leaves us with one final, very interesting thought. Now that you know how this math works, which company out there do you think offers the most explosive upside in a real bull market for silver?